Hello, traders, and welcome to another trading day with the team and to a new watch list, right? So we are going to start by looking at the DXY. Right, but before we do that, let's have a look at what we have going on the economic calendar, right? Today is the Bank of England Day. We're going to get the decision on the pace of the quantitative easing program, the asset purchasing program, and official bank rate, right? It's very expected that they are going to keep that the pace of their asset purchasing program and their interest rate close to zero at 0.10%. So no surprises there, but like last week on the FOMC day, we might get some hawkishness out of the monetary policy summary or monetary policy statement. So that's why we are keeping away from trading the pound today, because we are not going to front run that announcement, right? So let's have a look at the DXY. There's a lot of lines on my chart, right? And I'm going to delete a few actually. So the DXY rallied on FOMC day, right? Remember that the US dollar appreciated because they hinted two rate hikes by 2023, right? So we had a big 2-3 bullish days, right? And right now the XY, the US dollar, has retraced back. Actually, it hasn't retraced back to retest the previous broken highs, right? Around the 91.38, let's call it 91.36, 91.38. But let's have a look at the 4-hour chart. And right now, well, the downside on the DXY is being capped by the daily pivot, by the weekly pivot, I'm sorry. But if this is in fact just a pullback on the DXY, on the US dollar, it's pretty heavily expected that we're going to be retesting back that 91.40 to 91.36, or the previous broken highs. Why? Because this is the level that sellers were protecting, right? And this is the level that we saw buyers jump in March, right? Before taking the DXY on a, let's calculate it from low to high, on a 2.36% rally. But right now, like I told you, the downside is being capped by this zone. On the hourly, right? On the hourly, this is what I was looking at the beginning of the week, and this is why we were just looking for sales on the US dollar, right? The DXY was retesting the top of that structure and creating a reversal pattern at a very important bullish target. And right now, I mean, from that breakout to the lows, we saw a minus 0.67% move, right? On the very short term, yesterday's highs are capping the upside on the USD, right? Today we have unemployment claims on the US dollar out of the United States, and the final GDP quarter over quarter. But technically speaking, if buyers are not able to break with today's highs and yesterday's highs, I don't see the US dollar rallying anytime soon, right? We might get some downside to retest that area, right? The structure plus the 91.40, which is the previous highs that I showed you on the 4-hour chart and on the hourly. Now, having said that, let's have a look at metals. Metals, right now, let's start with gold, right? We were staying away from trading metals because of this extreme range that we have seen for the past 4 trading days, right? Yesterday we broke higher, right? but this is the level that sellers are protecting at the moment. And what I like about metals, in this case gold, is that we are seeing price stabilize above that 1770 level, which is the level that we saw buyers jump in this market back at the end of April, and more so when we saw that push to all-time highs, right? So this is a very, very important level for bulls if they want to keep price in what seems to be a bullish momentum since we created that double bottom back in March, right? On the shorter time frames, let's have a look at the hourly, right? I was looking at this possible reversal right at the bottom of the move, at the bottom of the bearish move, right at the breakout of these reversal pattern, right? But well, as you can see on this chart, this is just a massive, massive, massive level of resistance. Right now, we are seeing buyers pick up price every time the 1774 to 1773 level is retested, right? The previous 2 days lows are around these levels in gold. And today we saw price break with what were today's highs around the 1780.50, and price is stabilizing above that level. So we need to see what's going to happen when the New York volume comes in. Silver, again, same level that we were discussing, we have discussing for a week or so, right? Massive level where buyers have jumped in, and again, we are creating that flat triangle, right? And I am just sitting, waiting for that multi-year breakout, the same multi-year breakout that I talk about on every single daily watch list, right? So, if price breaks with the 2550 level or these lows, well, the next level that we could find buyers would be all the way down to the 2480, and again these lows right here around the 24 level. Now, if sellers break with these lows, that flat triangle structure that I've been talking about for a while will no longer be in play, right? So this is metals. Let's wait and see what the New York volume or the pre-market volume brings in. And let's have a look at equities, right? Today, yesterday I had a short on the DAX from these highs, I reckon. I don't remember. And my targets were all the way around the 15,300 level. But today we saw, the German IFO business climate, right? Just before that announcement, I saw this hourly candle that again rejected with the same level. So I decided to close my shorts at that time. And right now I don't see, on the hourly, the weekly pivot is capping the upside, right? This level right here, but I don't see a setup to enter short here on the DAX, more so because we are about to get triggered on our Dow long, right? Now, I'm going to write the analysis, but basically what I'm looking at here on the Dow very quickly is after this daily bullish engulfing candle, we had two pretty choppy trading days on the Dow, right? Now let's go to the hourly chart, And what I'm looking at here, again, a flat triangle, these are continuation patterns, prices, the upside is being capped by the 34 100 level, right? And buyers continue to pick up price higher and higher, right? So we are going to be long at the breakout of that flat triangle. I'm just going to write the analysis later, and I'll send it to you guys. Let's have a look at the pound before the Bank of England announcement, right? Very choppy day, very choppy day. Today's range is about 37 pips. And yesterday we closed positive, right, on the day, and we continue to make higher daily lows, and higher daily highs, right? This is quite the inside day, but remember that, traders are just waiting for that announcement. Front running that announcement is really not a good long-term profitable strategy. So it's pretty likely that we are not going to be trading the pound. Now, the way that I see it is that depends on what the monetary policy statement says, right? We might get an initial drop to yesterday's lows, or the weekly pivot, this area right here, where we might pick up buyers on the pound. This is the pound versus the US dollar, right? But again, the initial drop might be because they are going to continue with the pace of this round of quantitative easing. So that is bearish for the currency, right? But if the statement is a little bit hawkish, hinting some easing on this round of QE, we might get buying pressure after that initial drop. This is going to be very fast, and it's practically impossible to send a signal for that trade. I might not even get on that one, Let's have a look at the US dollar Canadian dollar. The US dollar Canadian dollar is pretty, it's in a very good position. I really like where the USD CAD is right now. So let me just delete all of this, right? All these Fibonacci retracement and extension levels, right? After we hit that 124.60 level, which was my power sell zone, where we got that sell earlier this week, where we made money, price stabilized around the previous broken highs, right? Now, the daily doesn't say much, but the 4-hour and the hourly do. What I like about this, let me just delete this line here. What I like about the downside of the US dollar Canadian dollar is because, fundamentally and overall, long term, we are very bearish on this market, right? The CAD is strong, and the US dollar continues to dip. So, more so, technically speaking, we are below the previous broken highs. So, during that FOMC day, right, we saw that spike on the CAD, on the USD CAD. But then, after that first reaction, we saw a continuation of the downside that we have seen on this market for months and months. And right now, price broke with that 123 to 123.15 level, and is creating on the short term a very nice continuation pattern, right? The thing about this setup is that I'm going to show you the risk to reward on this setup. Short, right? Wow, metals are flying. Let me show you right now what's going on metals very quickly. Yeah, I'll show you on the 50-minute chart, right? So this level, the 1782 level, was capping, or is still capping the upside in gold. There is a lot of selling pressure here, but But if you notice, again, a little bit of a flat triangle being created on the 50-minute chart. Um, and buyers keep picking up price higher and higher and higher, um, which brings us to the higher probability of a continuation in gold, which is the same story in silver. Silver had a better setup, that's why we sent that signal in silver. So let's go back to the US dollar, Canadian dollar, right? The USD CAD, right? Let's go back to the 1 hour chart. The USD CAD, right? The reason that I didn't set this setup is because we should be trading this short at the breakout of today's lows with stops above yesterday's highs, and our first target, our first target should be at yesterday's lows, which brings me to the point on why I didn't send it, because of the risk to reward ratio to first targets, right? Because we don't know, no one knows if sellers are going to be strong enough to break with yesterday's lows, right? That's why we always take profits at those levels. Now to TP2 looks a little better, but still, it's just not a good risk to reward to TP1. So that's why I didn't send it, right? But that's my analysis on the USD CAD. It looks very good. Looks very good for a continuation to the downside. Of course, that this is going to be also heavily influenced by today's price action on the US dollar, which by the looks of it, is going to continue down, right? But again, no one knows. You can just prepare for the different scenarios and trade what you see. Let's finish up today with some cryptocurrencies, right? Bitcoin, let's look at the daily chart in Bitcoin. Again, I really like this candle, right? This is a June 22nd candle, which was 2 days ago, right? Tuesday's candle. I really like that candle because shows a lot of buying power, and a lot of buyers trying to keep price at least above the 30,000 level, right? And if we grab the very low of this support zone, right? Price quickly got there and got rejected. But if you notice, we are still trading below these lows, below this level right here, which is why on the 4 hour chart, and I know, let me just delete all of this. On the 4 hour chart, you can see that we are still trading inside of this midterm bearish structure, and on the midterm, we are still trading below this level right here. This is the level that I was talking about, which is capping the downside, the upside, at least on the very short term to midterm in Bitcoin. Also, trading way below that weekly pivot. So trying to find buys here just would be counterintuitive with our trading system. What I would like to see is a clean break of the 34, what is it? It's to 34,350 level, and price stabilizing above that level for us to be able to find a clean and good risk to reward trade on the long side of Bitcoin. Ethereum, same thing. Well, Ethereum is creating quite the setup, right? At the very lows of the move. On the daily, same story. On the daily, same story. Price faked out below these previous highs that got broken. With that, this is where we saw buyers just picking up price to all-time highs. And again, back at the end of May, and now again, buyers are picking up price here. What I like about Ethereum on the 4-hour chart is this little pattern that is being created. This structure to the downside, right, looks very clean. Now, I want to trade a break uh, of these highs, of the previous highs, these highs right here, just because we are at a very strong level of resistance. What I would like to see is a break of this level, the 2250 level, and the price stabilizing above that level for us to be able to find a good risk to reward opportunity on Ethereum, right? But I mean, this is a big if on the hourly. On the hourly, this berry structure, the short-term berry structure, is just very clean. Yesterday, well, this is today, right? I think no, this is yesterday's range. Yesterday's range was bullish. I mean, we created a new higher high and a new higher low, which on the hourly might seem like a head and shoulders formation. But again, this is a little bit too soon to tell. I'll keep you guys posted. But in the meantime, we have a our euro, US dollar, silver, and we are waiting for that Dow to tick us in or to get triggered. And I mean, it looks like it will be triggered. Let me see on my MT4. Yeah, we are just 30 pips away from being triggered long on the Dow. Right? So trade safe. Be careful with the pound. I'll keep you guys posted on everything that comes out of the Bank of England. And see you on the inside.